Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. And if you're interested with the other pairs like Euro USD, Pound Dollar, Pound Yen, USD JPY, then you can also check out the Forex analysis playlist for the other pairs. So let's get started and talk about the chart of gold USD. Yesterday, on the later part of the video, I talked about the pattern gold was following here. Okay, because after three candles, gold was forming a big green candle, and surprisingly, the pattern continued. After these three candles here, okay, we saw a good green candle on the chart of gold, and as per our expectation, okay, this level acted as a resistance here. So overall, this was a good trading opportunity for us. Okay, and right now you can see that we have there's some sort of correction going on the chart of gold, and right now market is trading at 1797. This is the current market price here. So overall, one thing is very much certain that 1809 to 1810 is a resistance for the market right now. Not a very strong one, but yes, a good resistance for the market, because see, each and every resistance or support in the market is not equal. Okay, some resistances are very strong, some are weak, some are of the medium strength. So this level, more or less, it's a good one, not a very strong one, but a good one. Okay, so 18.9 to 18.10 is a valid resistance for the market right now. So in case if market starts going up also, we may see some sort of selling again in this level. But keep in mind, NFP coming up on Friday. So during the event, if we see heavy up move, heavy buying on the chart of gold, this is not the level that will be able to hold the market. Okay, so these are, because to hold an event like NFP, we need a bigger level like 1875 or 1750 on the downside. Okay. Anyways, 18.9 to 18.10 is a more or less good resistance as of for the market right now. And if you look at the downside, do we have any proper support here? No, we do not have. Previously 1790, yes, 1790, if you are a gold trader, then you know about 1790 very well. Previously 1790 was a very strong support for the market, but right now the level is slowly losing its importance. Okay, so right now we do not have any proper support on the 1790 right now. Okay, but the support has shifted to 1786 here. So in case the downtrend continues in the market, okay, instead of 1790, we may see 1786 providing the support to the market. Keep in mind, under normal circumstances, when there is no event in the market, no news in the market, slowly market is coming down, we may see good reversal from 1786 level. So there is a possibility of market bouncing from 1786. So if market bounces from 1786, if you see price rejection from below at 1786 level, in the form of a hammer, in the form of a bullish pin bar, or if you see a bullish engulfing pattern at 1786 level, you will get the confirmation that yes, 1786 is a valid support as of now, and you can take a buy. Okay, and the third level for the market is the level of 1780 to 1780 to 1781. This is the next support for the market. In case 1786 fails to provide the required support to the market, this level may come as the next savior to hold the market. Okay, so 1786 is the first support, then 1780-81 is the second support for the market. Always keep in mind, the support and resistance level are not a single number. Okay, they work in a zone. Okay, support is a zone in the market, resistance is a zone in the market. Always keep in mind. Okay, and see, we also have a minor support here. Okay, now let me talk about some minor supports here. Yes, minor support at 1794 to 95. Okay, so we may see some sort of buying in this level, but to be honest, if you ask me, Avilash, can we rely on this level of 1794.95? I'll say no. If you are a gold scalper, if you have been gold if you have been scalping for a considerable period of time, then you can take the risk of taking a buy position at 1794.95 level. Otherwise, I'll say strict no. Okay, anyways, my dear friends, this is a chart of gold, so please follow proper risk management. This is my analysis, I can be wrong as well, so it's your duty to protect your hard-earned money. And as I always say, do not risk more than 2 to 3% of your trading capital. You should not be exposing 40%, 50%, 70% of your capital, because each and every day I come across traders who share their sad stories with me. They have been blowing their accounts because of bad money management. Okay, always keep in mind, every trader must know proper risk management. Always keep in mind that the only thing that is in the hand of a trader is his loss. Trader can just expect, we can just, being a trader, we can just expect that if we buy here, market will go up. If we sell here, market will go up. We can just expect. But a trader can decide only one thing, that is the loss he's about to take before the trade only. So please follow strict risk management, because this is my analysis, I can be wrong also. 100% accuracy is not possible in the market. Okay, there are many scams running in the market in my name, where the scammers are saying that they will be providing. Yes, I saw yesterday. They are promising that 100% guaranteed results. Okay, if you invest $300, they will convert into $3,000. My dear friend, these are just scams. Okay, just think. Okay, those who drive the market, the banks, the funds, the hedge funds, mutual funds, those who have the capacity to drive the market, how much return they give you? Okay, they just give you 20%, okay, 15 to 20% annually. When they have got billions of dollars, they only give you 15 to 20% annually. Why? Okay, because yes, their size is huge, but still they have the power to generate hundreds of percentage each and every month, but still they give you 15-20% annually. Obviously, there must be a reason, isn't it? So do not fall into scams. Save your capital, save your hard-earned money. Okay, bye bye.